Bro, it's 20, our age lah, 27.
Oh man.
So fast getting married.
Yeah. Left and right, bro.
Yeah, I mean, some of my friends already have kids. It's just
Yeah.
crazy. All right, we are live on YouTube. I think we can start, right? We'll start
All
off with
right.
the monthly first, weekly, daily, hour four, and then the straight away to the 15. So mark that in your put it in your notebooks. So the first pair that we're gonna look at every single day is gonna be the weekly first,
Right.
right? Weekly first, and then we'll go down to the daily. So the weekly and the daily is your bias. The weekly and the daily is your bias. Power 4 is your behavior, and the 15 is your execution. It's almost like the daily trading, but just we are adding weekly into our bias, right? So that's number one. Number two is going to be patterns. So we're going to focus on two main patterns on the 15-minute time frame, which is double top and double bottom. Double top is going to be an M, and double bottom is going to be a W. That's it. Very, very simple stuff. So now we'll go up to the weekly time frame and start off with analysis, right? So when it comes to the weekly time frame, we have to look at the bigger picture because we are looking for swing trades, meaning we are going with the overall direction rather than focusing on what price is going to do today. We're going to be focused on what is it going to do for the next 1, 2, 3 weeks, sometimes even 2, 3 months, right? It depends on the structure. But as of for now, looking at gold, so by the way, before we start, when it comes to swing trading, one pair is not enough. You need a minimum of 15 pairs, right?
Right.
I will send in the list later. So we'll be using 15 pairs because in a week, swing setups, you might get around within the 15 pairs, you may get maybe one trade or maybe two trades. If you're lucky, three trades in a
Right.
week out of the 15 pairs because we are waiting for price to come to your zone and all that. It will take a long, long time. So 15 pairs is the minimum. And
All right.
the more the more the better. The more you
All right.
have, the better. But try and focus more on major pairs. Don't go for exotic pairs like USD ZAR and all this stuff. But yeah, just focus on major pairs, and also if you can go with Euro USD, GBP USD. These pairs are very good for swing setups.
All
Euro
right.
GBP and all this.
Mm.
Right. So looking at the weekly time frame, step number one is you need to recall back chapter 1, lesson 1, right? Trend
Mm.
lines, higher highs and higher lows, that lower lows and lower highs. We're going to focus a lot on that. But at the same time, we're also going to focus on support and resistance as well. We're going to correlate trend lines with support and resistance zones, right? So
Right.
looking at the current structure, we can clearly see that overall structure, we are printing higher highs and higher lows. Currently, yes, we are going back to the downside, but we understand that looking at the economics, price might go back to the upside because of the ceasefire, right? So looking at the current structure, we do have a support formation over here, previous weekly area. Last week we did tap that area and we rejected the high, sorry, the low, meaning that we have respected a support key level. Keeping that in mind, the current weekly candle doesn't have a bottom wick, so there is a possibility for us to go back to the downside. But I am looking for a buy because everything is bullish, higher highs and higher lows. Price rejected a major key level, and also there's a clean range for us to go back to the upside, all the way towards this resistance, right? So
Right.
looking at the current structure, meaning the current price, we did close bearish below structure, below support over here. But at the moment, because we are respecting this area, we are back to bullish. So what do we do when price steps at support? We look for buys. When price steps at resistance, we look for sells.
All right.
Simple basic theory. And yeah, so my bias for the week is gonna be bullish, but I will only confirm my bias if we close bullish in the next 2 days. And then the next candle push down, create a bottom, we break the high. Now you have a confirmed bias that you're gonna go back to the upside. But based on the current candle and current rejection, I would say we are still back to bullish. Moving down to the daily time frame, we can clearly see that price has rejected the same key level, respected the area. Let me clean up the zone first. So this here is a major key level on the weekly time frame. And you can clearly see that the weekly time frame has been rejected. We went all the way to the upside. So what do we have to do is, it's very simple. On the daily time frame, I want to see price creating a higher low first. Because at the moment, we are just pushing up. It's a basic uptrend, right? A simple uptrend. Higher high, higher low, higher high. That's all we are looking for. Nothing else. Very simple stuff. So at the moment, we are tapping this resistance and support area. So I am expecting price to come back to the downside, form a higher low, and then potentially look for a buyback to the upside. So that is our plan. So looking at the daily time frame, we can clearly see that price is still bullish, but we are expecting a sell to come down back to the downside first, and then later on we look for a buy. So that will take another 3, 4, 5 days. We never know.
All right.
So let's go down to the Hour 4 time frame. Looking at the Hour 4 time frame, we can clearly see that there is a clear uptrend back to the upside. So what I want to see is, I want to see price breaking through this structure, respecting our nearest support or resistance. So within this structure, we have two main key levels. One is going to be on this area number 1, and put a flag there, and area number 2 is going to be here. As we understand, price has respected and rejected area number 2. So it doesn't really need to go all the way to the downside. Now, this is where Fibonacci comes into play. How does Fibonacci work is, it starts from the lowest point to the highest point of your swing high and your swing low. What does that mean is, it's basically your major high and your major low. We got our zones, right? The highest point and the lowest point. That is your major low, and that is your major high. So in an uptrend, we start from the bottom part, and then we bring it all the way to the upside.
All right.
So now we can clearly see that we have a golden level. These two zones here, golden key level, 0.68 and 0.5. These two here, this one. Let me besarkan the. All right. Can you see the gold line? The yellow one in the middle?
Yeah, bro. Yep.
Right. So that is where we are expecting price to come back to the downside, respect the area, and then we go back to the upside. That is what we are looking for. So it's in sync with our bias as well, higher high, higher low, higher high. So as long as price is still printing an uptrend without a pullback, we are not going to go in for a trade.
Okay.
We have to wait for the daily to come down, the whole fall to come down, form a proper structure, and then we go back to the upside. Simple as that. So what about take profit zone? So example, if you take a buy over here, your stop loss is going to be placed on the lowest structure. So it means that, example, if the whole fall comes down, where is my, okay. So how far comes down, I want to see us printing a new no trading zone, print a new no trading zone, and then break the highs, right? So if you take a buy over here, yes, your stop loss is going to be based on the overall structure, meaning the how far support. And your TP is going to be based on these 3 lines here. We have TP1, TP2, and TP3. It's up to you which one you want to go with. So this is TP1, TP2, and TP3.
All right.
So you're going to be risking about 612 pips. In return, you get about 38,000 pips. Sorry, 3,800 pips. So we discussed about the behavior of the hour 4. At the moment, there's no trades. We need to wait for structure. And also we need to wait for a pullback. But we have our buy zone. So this is where we're going to potentially be looking for a buy. Right, we have our buy zone. So now let's talk about the 15-minute time frame. On the 15, it's very, very, very simple. We just want price to come down to that area, that buy zone there. Come down, create a support, reject that area, come down for the second time, and close with a strong bullish candle over here. Meaning I want to see a proper double bottom here. Candle has to push. Doesn't matter if it consolidates or not, as long as we have that structure, double bottom. Right? The first rejection. I'm just drawing the candles roughly, like it won't be exactly like that.
All right.
So here I want to see a bullish engulfing. Once we have a bullish engulfing over that area, we're going to place a buy, and your stop loss is going to be below the support. And the TP is going to be based on the hour fall. Simple as that. So basically, to simplify things, we're just gonna wait for price to break a structure, retest that area, and then go ahead with your direction. Lower low, lower high, higher high, higher low. Doesn't really matter. So now we talked about the practical. Now let's apply that in a more realistic manner. Let's look at past price and do that. So let's look at the weekly time frame. I think we're gonna go with different pair. Let's go with GG. By the way, the analysis that we did is it's a valid one. So if price goes there, you can try and look for buys later on. Right, looking at the weekly time frame, and this is what you have to do next week. Every day, we're gonna go with analysis based on the weekly, daily, hour 4, and the 15th. Right. So looking at the weekly time frame, we can clearly see that we are consolidating over here. There's a very, very strong consolidation. So two things can happen. Either we break above and continue back to the upside, or reject and push back to the downside. It's very, very simple. But by looking at current structure, I would lean more on the sells because there's a lot of rejection within this key level over here, consolidation and also rejection. So my plan is going to be looking for sells, right? Moving down to the hour 4. Oh man, this is beautiful. Moving down to the hour 4 time frame, we do have a double top formation on the hour 4, sorry, on the daily time frame, which is perfect. So if the daily candle is going to close bearish, ideally I would like to see the body closing below the previous candle low, right? The candle has to close below the previous candle low. That would be my confirmation that I want to be looking for a sell. So based on this structure, we're going to go down to the hour 4 time frame. So as we understand, if you want the daily to close bearish, we need to look for a closure below this. So what we're going to do is we're going to let the candle play along, let it push first, come back to the upside, giving us a lower low, lower high. And all you need is just 2 or 3 candles side by side closing bearish. And that's where you go down to your 15, look for a double top. And there you go. That's your sell. You're going to be executing over here. It's very simple, actually. You just have to wait for price to come to you. SL is going to be on the highest point, and your TP is going to be based on your daily support, because this is the double top. So with double tops, we tend to go with the nearest support or resistance. So in this case, it's going to be your nearest support. This here, your major support. That is your take profit. You get around 1.2, 1.3. But if you want to extend that, it's fine as well. You can go down lower.
So it's just like normal trade when we open
Yeah,
TP or
exactly the
extend
same.
TP. All right.
Yep. The hardest part is just for you to wait for price to come to the specific key areas. So we're going to stick with 2 pairs for this week. Let's go with the 2 pairs, and then we're going to monitor for the next 2-3 days. See what happens and can we take trades or not. Let's go with GJ and Euro GBP. That's the 2 main pairs.
Okay.
Oh, sorry, Euro USD.
Euro USD.
Yeah, Euro USD.
USD,
And
GBP
just in case, we're going to add another one, which is GBP USD.
GBP USD. Along with GBP JPY as well.
Yeah, 3 pairs in total. There are 2 main ones, and the other one is just, if you don't have anything, then we just go to the third one.
All right.
So first one has been done. We're just going to wait for price to break below this support, come back, and then retest, right? That's all we are looking for, nothing else.
Right.
Break this key level, retest, and then we're going to look for potential sell. So that is our sell zone. Mark your trading view and don't delete, just let it be there.
Right.
So put a remark that you're going to look for sells.
Okay. Do we still analyze gold as well for the analysis?
For swing, not really. Swing, not really.
Okay.
Swing, let it be for your daily entries. GJ and all the other pairs used for swing.
The analysis that we will do is based on the 3 sessions as well, or
No, with swing,
specifically
you
for
don't really look at sessions. You just go with the breakouts, retracement, and then execute. Volume
Alright.
doesn't really matter, because if you go with swing entries, you're not really focused on the volume. The reason why I say that is because, example, if you execute during London session, and that trade is going to go on for the next 3-4 days, right?
Alright.
So there will be times where your trade will be in the session, but there's no volume. So it doesn't mean that you need to get out of the trade. You just hold your trade. So it doesn't really matter when you execute, as long as you're going with the structure. And yeah, earlier we talked about the overall structure, the bigger structure of executing on the
Daily.
However.
Hour
based on the
4.
daily and the hour 4. So
Okay.
there's two ways of looking at swing trading. First one is for you to get entries and hold your trades on the daily time frame, meaning you'll be holding your trades for 1, 2, 3, sometimes even 1 month, right? Another way of swing trade is based on the solely on the hour 4 and the 30-minute. That's the only two time frames. Sorry, 30 and the hour 4 and the 15, my bad.
Hour 4 and 15.
Yeah, hour 4 and the 15. And this type of trades will go on for maybe 3 days, 4 days, somewhere there. So it's much more shorter, but then it's still a swing trade. Right, for that, I'm going to use GBP. Let's go with GBP USD. Looking at the hour 4 structure. So for this, your hour 4 is your bias and also your behavior. Your 15 is just your entry. And this is my favorite way of trading swing because you get faster entries and also it's much more easier. It's not that complicated. You don't have to look at the daily, weekly, and all that. So I suggest you guys to go with this, start off with this first, and then later on we'll go into the more the position holdings, as we say.
Okay.
Right. So looking at the hour 4 structure, currently we can clearly see that price is printing lower lows and lower highs for now. But prior to this, we were printing higher highs and higher lows, right? So what we're going to look for is two things. When it comes to the hour 4, this way of trading, you can either go with rejections at support, rejections at resistance. So I'm talking about the higher time frame, only based on the hour 4, right?
Right.
So we'll be looking for buys at major key levels, at the lows and the highs. That is number one. And number two, we're going to be looking for entries at the continuation of lower lows and lower highs, meaning hour 4 leaving the area, coming back for a pullback, and then we go in for a sell. Or same thing for the upside as well. Higher high, higher low, and then push back to the upside. So this correlates more with our daily trading actually.
Yeah.
In a way, it's like a no trading zone as well. But then you're executing on the 15 and holding the trades longer. So it's very simple. You just have to wait for confirmations on the whole 4 structure. So how do we identify confirmations? It's very simple. You just need to see or wait for 2 candles closing side by side.
All right. So
Or
just
even
just as normal.
forming a support or forming a resistance at a major high or even a major low. That is number one. And number two is going to be a type B formation at a lower low, lower high continuation setup. So we talk about the rejection at highs and lows first, and then we're going to go to this lower low, lower high entries, right?
All right.
So easiest way to identify is sometimes I like to use the hourly as well, just to get a better picture, a better idea of what is happening. So let's talk about this structure here. We'll go with this. So first thing first, 9 o'clock in the morning, we closed strong bullish. Second candle, 1 o'clock, we closed bearish, right? That is a confirmed bias that we're going to go back to the downside because we have an engulfing. Keyword here is engulfing, meaning the hour 4 candle closed below the whole previous bullish candle. It ate up the whole candle. That is called an engulfing candle, right? That is number one. That is what you need to identify in a major high or a major low. That is number one. Number two is we go down to the hourly or the 15. Either one is fine. But just for the sake of this, we'll go to the hourly time frame. So at the hourly time frame, you can clearly see that the reason why we waited for the hour 4 to engulf the candle first is because we want to see this formation. This formation will be visible on the 15 and also on the 30-minute time frame. Sorry, the hourly and the 15-minute time frame, both, which is the double top. The difference with the previous one is here we won't be executing at the double top. We'll be waiting for the neckline execution. What does that mean? Neckline execution is once we have printed a double top, price tends to push and then pull back, right? So once we create that pullback, we'll go down to the 15-minute time frame and look for a bearish engulfing candle. A bearish engulfing candle represents exactly what the hour 4 represents. One long candle eating up the whole minor range.
Okay.
Right? So let's look for that structure. So yep, we got one here. So once the candle ate up the whole range like this. So I'm focused on the 11:30 p.m. candle. Candle ate up the whole range exactly at the lower low, lower high structure. Stop loss is going to be on the high point of the resistance. Not on the top week, not on the bottom week. It will be on the resistance, right? Like that. and your take profit straight away down to the hour force support immediately.
All right.
That's it. Very simple stuff. Clear on this?
Just a moment, bro. I tried to make a graph drawing based on this.
Yeah, but so I think I'll draw that for you as well. Yeah.
All right.
The lower, low, lower, high, and then continuation back to the downside. Let me make it a little bit faint. But yes, this way of swing trade is one of my favorite. So you took the trade on Monday and you almost hit your TP on Tuesday. So it took 2 days, close to 2 days. But realistically go with the nearest support. Don't go and put it all the way at the bottom, sampai bawah sini terus. Because that is for the higher time frame analysis. This is based on the hour fall.
Okay.
Right, once you're done, let me know. You can take a screenshot as well.
All right.
But as you understand the structures and all, you can also execute trades at the double top formation as well. But it needs to be at a what you call a perfect rejection point, a major high or a major low. So as an example, let's go with the double top at the bottom here, right? Are you done with that, bro?
Yeah, something.
All right, beautiful. So let's talk about execution on the 15th, but then based on the double top or double bottom on the lower time frame.
All right.
Not on the key level or the neckline, but based on the second tap. Meaning your double top, it represents 2 taps, correct? Your first one is here, and the second one is going to be on the second area. So the second area, it's kind of a type B entry, but then we wait for the candle to close. Right? So you need your first formation to respect the exact same area or the exact same resistance or support. So in this case, it's a double top. Notice how the candles formation are exactly the same, right? Exactly the same. So the second formation, if you are going with the hour for bias, that you understand that the hour for is rejecting a resistance or a support. On the second rejection, you're going to place a sell the moment the third candle engulfs the whole structure. So meaning once the candle closes, we're going to take a sell. A sell is going to be on top of the resistance. And your TP is going to place on your nearest hour for support, which is all the way at the bottom.
In example, bro, if that neckline side, we don't really get an engulfing candle, but we ended up to be a consolidation. It means it's still invalid until we actually create the engulfing.
Okay, so when it comes to consolidation, right?
Yeah.
It doesn't really need to be a type B. So example, like here we have a consolidation, correct? This one.
Yeah.
So this here, this single candle is an engulfing candle. So with that, you can still execute and your stop loss is going to be at the high.
All right.
Right. So if you miss the first entry, there's no reason for you to say I missed the trade. Just wait for the neckline to be tapped, look for an engulfing, and then still go in for the same trade. So this is a continuation. This is a double top. Yeah.
Yeah.
Right. So now let's apply that same rule to a buy as well. Sorry, bro, you were saying?
I mean the entry that we're gonna take is during on the engulfing after we broke the support.
No. The candle has to engulf and then close.
Okay, and close, and the next candle is basically our execution candle.
Next candle doesn't really matter. The moment you close, you can just go in straight away.
I see. Got it.
It doesn't really matter because we're expecting volume to come in to push price back to the downside and also reject that area and just go through the structure. And remember, you're executing based on highest point and lowest point.
Yep.
We're not executing in the middle of the area. So that is why it's a good entry now, basically.
Understand.
It will take some time for price to come to the key levels, but if it works out, it's going to be a good trade.
All right.
Right. And now let's talk about the buys. Let's use the same structure going back to the hour 4 time frame. Right. Let's focus on this area here now. So that's your resistance and that's your support. So as we understand in a no trading zone, price will just bounce up and down, correct?
Yep.
So now as we can see, price is coming back to this support. So if we don't close below with a body closure, that is telling me that, okay, price might still respect this area. So I will be monitoring how the hour 4 candle is going to close. So this candle is going to close in the next 2 hours and 46 minutes. So if this guy closes strong bearish like this, but does not break the body below the support, now I have a bias coming, which is bullish. Even if the candle closed bearish, I'm not bothered. Because what does that tell me is, now we have a first rejection point on the hourly time frame. All that I need for me to take a buy at this point will be, now let's go back to the hourly time frame. So I just need a first rejection on the first hourly candle. And as the second hour 4 candle opens up, we're going to have another new rejection because and if you have a bullish engulfing on the second tap, you're going to take a buy. It can be on the 15, it can be the hourly, it doesn't really matter. But as long as you have a bullish engulfing, you're going to take a buy, your TP is going to be all the way at the high stuff, straight away. And notice where we are executing. We are executing only at the key levels of major highs and major lows, nothing else.
Can I look back to the hour 4, bro?
Yeah, sure.
Okay, so this is the hour 4.
Yep. So what I'm looking for is basically this formation, 2 candles side by side. That is your double bottom on the hourly time frame.
So this will be our major for the hour 4.
Yep. But the problem with this is, because if you already miss the first bullish engulfing on the hour 4, you're gonna wait for the neckline. Right?
Okay.
So you can't be executing trades if you miss the trade. You need to wait for the push, the pullback, and then baru masuk on the third entry. Sorry, on the second entry.
All right.
Right. So let's go back to the 15. So yeah, first step, second step, engulfing, and then you can go in. If you miss that, you will see another higher high, higher low formation, right? And with this type of entries, if you see a second higher high, higher low, I wouldn't go in. It will usually be the first one.
Okay,
So what I mean by that is, example, if you have a higher high, higher low kat sini, and you miss that trade, after that, if you have another higher high, higher low, I'm not going to go in for that. Because at this point, you have already pushed up a lot, right? For it to continue higher, yes, the probability is there, but we've pushed up a lot. Might as well wait for price to reject that area and then take it back to the downside once we break a key level.
All right.
Clear, bro?
Okay. Yeah, clear, bro. But can we zoom in on this one, the current structure?
You mean the current candle here?
Yeah, the current candle here.
Right, let me clear everything first. Right.
Okay. All right. So currently on the based on the current price, right? If we were to create an example of a let me just get this.
You can draw on the screen.
Yeah. I'm trying to find the tool.
Pencil tool.
Yeah, the shapes. Not sure where is it. Okay, there it is. Okay, so in example, if this candle goes like this, the current price, right? And then the second one is probably gonna be engulfing candle like this, right?
Bro, okay. Your can you change the color? I can't really see the candle properly. Change it to black if you can.
Okay, black. All right. Okay. So
yeah, you can see.
I'm not sure why it doesn't project. Let me try again.
Yeah, it's opaque. The color is not that bright.
Okay. Let me try to use red.
Use the solid box, third one.
Okay, solid box.
The third one.
All right. Okay, so and so the structure is like this, and then the candles basically go all the way down like that. Right. So this will consider as the engulfing.
Yeah, I don't I don't see your box.
Yeah, the issue is that when I try to draw, it would just go missing.
Oh shit. Okay.
Yeah.
I tell you what, you share your screen and show me what you're trying to say.
Okay. All right. So
let me close off my trading view. You share your screen.
All right.
All right.
Let's just open the screen.
Because I can draw on your screen, so no worries.
All right. Okay. Let me just share.
But so far you're following, right? What we're supposed to look for.
Yeah, but I'm just a bit curious about the hour 1 and the minute 15.
Yeah, minute 15. It's basically the same thing, just that You know, if you find a double bottom or a double top on the 15, execute that. If you see it on the hourly, execute that. That's it.
Okay. Right, can you see my screen, bro?
Yeah, can.
Okay. Let me just change it to the this is GBP JPY.
GBP USD.
GBP USD. GBP USD. Okay. So earlier we were speaking about the 15.
Mark your zones first, bro, on the hour 4 so that you don't get confused.
Right.
Put it on the highest point and the lowest point. So
Okay, so
yeah,
currently we
that's
have
your
the highest
support resistance.
spot. Uh, so resistance is going to be all the way down here. All right.
Right.
So earlier, what did I
15,
mention
15.
is an example.
All right.
So we said here, right? If we have a candle basically doing this,
All right.
right? So with this considered as an engulfing, and would it be valid
For the sell,
for the sell? Correct.
you mean, okay, so if the price is coming, printing a lower low and a
Yeah.
lower high structure, and then it does this engulfing, correct?
Yeah, based on the current
Okay, so
overall
it
structure.
depends on where we are engulfing the candle, right? So if you did the engulf on the highest point, then yes, it's valid. So meaning, example, if you did this over here structure and then tiba-tiba jatuh macam ni, then it's valid.
Yeah.
Right?
Example for like this, like okay. Example of like this structure right here.
Okay. So is that your highest point?
Currently, no.
No, right. So that's your highest point is on the hour 4 up there. Right. So it's very simple. If you got a trade on the highest point, then that's your best entry. Right? You can go with the full 1%, 2%, and so on.
Okay.
This here represents your pullback entry, which is basically your neckline. Can we zoom out a little bit?
All right.
To your left, go to your left, right? Look at this. That's your double top, right? And then this is your neckline rejection.
All right.
Remember what I said earlier? I will only execute on the first rejection.
First rejection.
Right? So this is your first rejection. So if you miss the trade, you miss the trade. That's it.
All right.
If you want to do this on the second engulfing or second rejection, yes, it might work out, but ideally what I would like to see is a perfect double top first. So meaning I want to see is rejecting high and then the second time and then we engulf, then yes, it would be valid, but it has to reject at the same key level.
All right.
Meaning a second double top. If it's a first rejection, meaning something like this, first rejection, and you see this type of confirmation, I wouldn't go in.
All right. Okay.
I want to see us doing it for the second time, then we can go in. So technically, this here is a valid sell, stop loss above and then TP. But the problem with that is you already ate up half of the range, right? And you're going to take this sell and your stop loss is huge. And your TP is very, very close by.
Okay.
Right? Your risk to reward is off. So that is why I like to execute at the highest point or the second highest point. Anything above that, tak payah.
All right. Okay.
Clear, bro?
Understand.
Okay,
bro.
So yeah, let me share my screen and let's go with the buys block of the hour 4 rejection.
All right.
You buka trading view.
Sure.
But it's actually easier than it's much more relaxed, I would say, compared to the usual entries. Because you're gonna wait a long, long time for price to come to your place.
Yeah.
And only if you have confirmation, baru you execute. If not, you don't execute. Simple as that.
As long we don't have as long we are not there within the current market price to the major range, then there will be no trades.
Correct. So whatever it is, you need to wait for price to come to your major high, major low. If it doesn't tap that area, then you don't have to execute now, basically. Right?
All right.
And by major high and major low, I don't mean this major high and this major low, right? Because now remember we are using the hour 4 as our our highest time frame.
Okay.
So in this scenario, your highest point is going to be your swing high and swing low, meaning the highest point and the lowest point. That is your swing high and swing low for this current structure. So how do we identify the areas? It's based on rejections. The more the rejection, the stronger the resistance. The lesser the rejection, the weaker the resistance or support. So in this scenario, if you reject this whole four here on the bottom part, the support, you technically will be able to go back up.
Okay.
So if we break this support, I'm not going to jump into the sells immediately. I'm going to wait for price to come back up, lower low, lower high. Same thing, double top on the hourly, and then baru kita masuk. Go back for the sells. Clear, bro?
All right. All right.
And another layer of confirmation you can use is trend lines. Use this.
Trend
Like
lines,
now
all
you
right.
can see signs of breakouts, right? But you need to use correlation. Trend lines in correlation with support and resistance. So this candle breaking below this trend line doesn't mean we are bearish. It needs to also break below this support. So if both supports has been taken up, meaning support trend line and support the base, both has been taken out. Now that is your confirmation number one, that okay, price is trying to go back to the downside. So you just have to give it another 1 or 2 days for you to leave, come back, and then you baru cari your double top on the 15. Sometimes you can go in with Hour 4 double tops, right? Hour 4 double tops usually will form on the 15-minute time frame, which means it's a pause and go on the 15. Sorry, on the Hour 4. Pause and go on the Hour 4 represents first candle closing bearish, second candle closing bullish, third candle creating your double top, and then breaking back to the downside. So how we will look on the 15 is very simple. Lower low, lower high, reject, another high. You're going to execute on the top week of the Hour 4 candle. Make sense?
Makes sense.
All right. So with this type of executions, I don't really like to extend my TP all the way to the downside because remember, we have not created a pullback. It's just a minor pullback
All right.
on the Hour 4. It's technically a breakout. So with this, I would like to go with 1 to 2, 1 to 3, final TP. That's it. Get out of the trade. So ideally, if you execute on the highest point of the top week, you're going to place your final take profit at the second Hour 4 bottom week. It's going to take about 4 to 5 hours of trading. You're just going to hold the trade for 4 to 5 hours. So this is one way of holding your trade. But if you want to go with the proper swing, then just wait for it to come back and then go back down.
All right.
Right. So let's look at examples based on that structure. Yeah, this one. Support. Right. Look at what price did. Left the area, came back up, and then you go in for a sell. So your execution is going to be based on a hourly or a 15-minute double top, somewhere in this structure here. And when it comes to double tops, there's two types. One is a linear double top, which is exactly in the same area. And another type of double top will be a little bit lower. The first high will be at the top. Second high will be just slightly a little bit lower. Right? And this counts as a double top as well. You still can go in for a sell.
All right.
That's the only two types. So let me show an example of that. So this here will be a perfect double top, right? Perfect Hour 4 double top.
Okay.
And this will be a double top as well, but the one yang tak selari lah, right? One is higher than the other, but technically still a double top.
Understood.
And if you see a double top on the Hour 4, that is a confirmation as well. You can even execute straight away on the Hour 4 as well if you see your confirmation. That example like this here. First step and second tap, right? First step give us a rejection. Second tap did the exact same thing. So once your Hour 4 closes, execute straight away. Stop loss on the high. TP will be on your nearest support.
All right.
Right? But you need to be cautious with the direction. If you're not going with the direction, 99% of the time you will lose the trade.
Okay.
So that's why the bias based on the Hour 4 is very, very important. And that's the main reason why I like to go with breakouts and then the pullback. That will make more sense for us to go in for a sell rather than jumping in too early and then getting in the wrong end of the trade. Right? So this, I'm talking about the Hour 4, not the 15.
All right.
So any further questions so far?
So far no, bro. I definitely will rewatch this.
Right. So tomorrow we're gonna go focus more on the 15 entries, executions. And then if ada masa, we will do analysis together. right?
Okay.
You'll be sharing your screen, you do your analysis, I will just assist in the background.
All right.
Right? So besides that, I would say, yeah, that's the basics of it. Breakouts, continuation, pullbacks, go down to your hourly or the 15, look for double top, double bottom, execute. That's all it is. Nothing else. Right? I want to touch a little bit on the Fibonacci thing. So this is the Fibonacci and this is the settings. Just copy that, take a screenshot, and then later on you do it on your Fibonacci as well. Exactly the same.
All right.
Once you're done, let me know, bro. Just take a screenshot first, no worries.
The screen is a bit blurred.
Okay, then it's fine. I'll send it the group. No worries.
All right, bro. Thanks.
No worries. All right.
All right.
So just follow that and do it. So how do we implement our Fibonacci? Is very, very simple. Usually I like to do it on the 15-minute time frame because we're gonna wait for the pullback, correct? So that's where I'm gonna wait for the proper entry. So in this case here, let's base our trade on the hour 4 first. Give me a second. Why is it lagging now?
Is it because web?
Sorry, bro?
Is it because you're using web?
I think so. Maybe, probably. Not really sure. Yeah, I have the app. I didn't open the app. Probably because of that. Right. So, hour 4 support, hour 4 resistance. What were we talking about earlier? Oh, Fibonacci. Right.
Yeah.
So, for Fibonacci to work out, you need an elongated structure. So, it tends to happen more on the 15, but it can also work out on the hour 4 as well, right? So, as an example, this is the highest point of the price, and this is the lowest point. Just ignore that this thing worked out, right? Just focus on the highest point and the lowest point. So, how do we place our Fibonacci is based on the high and the low. So, this is your high, and the bottom part is your low. And as you see, price ngam, it came and tapped the 0.5 key level, and then it rejected back to the downside. So that is where we tend to look for entry. It can be on the 0.5 or 0.618. Ideally, it would be on the 0.5, but sometimes, it's not perfect. So you'll get entries at the 0.6 or 0.5, somewhere in the middle of it. It doesn't really matter, as long as you know where to execute. So this is the basic principle of it. So let's try and correlate this with the 15-minute time frame. So as an example, we're going to use this structure here for our entry based on the two candles here, 1 and 2. Let's go down to the 15-minute time frame. Right. So we can clearly see that we have a strong push back to the upside over here, correct? From the support, from the major low towards the major high. So we're going to place our support, bottom part of Fibonacci at the support, and then the high point at the resistance, right? So this is where resistance is sitting at. This. So low. So we call it the swing low and the swing high. Where did the push start from and where did the push end? That's the only thing you're looking at, right? So that's your lowest point and this would be your highest point. And notice price came down to the 0.6 and 0.5 area, correct? It rejected this key level. So this is where you're going to look for potential buys, mainly engulfing candles or even a rejection candle. So for me, I won't go much in detail for now, but for me, what I look for is usually rejection candles, right? It doesn't really need to close an engulf. As long as you see an isolated bottom wick rejection candle, it closed, immediately you go in for a buy, stop loss, as I mentioned, the second gray line, and you can go with TP1, TP2, TP3, whatever it is, right? I like to go with TP2 usually. So that is your entry. And as you see, it perfectly synced with the no trading zone. Sorry, with the golden level. And that applies to every single structure. Let's just do this blindly. So that's your support. That is your resistance. Put up a zone. Support to resistance. Look at that. Price tap almost there, but then still at the golden level. Right? Rejected. Fly back to the upside. Hit TP1. Let's do this on. This is not very clean. I want to see a clean structure. Yeah, beautiful. This is very clean. So support to the resistance. Look at that. Ngam 0.5 with an engulfing as well. So you go in for a buy, engulfing candle, stop loss on the second line. And this is beautiful. Hit TP3 ngam and then rejected. Look at that. Holy.
Oh,
Right? Beautiful.
all the way.
Yeah, all the way TP3. And it also applies to the major zones as well. So as an example, this is your highest point, this is your lowest point, but it will stop somewhere over here. So we can also extend the zones. So this is your support. Right, look at that. Price rejected. Came back to the 50% area. We got into a sell entry 1, entry 2. Either way, it still hit TP1. Beautiful. So as long as you go with the structure and you have the idea of where price might reject, you can just go ahead and execute. But I just use this as a confirmation. I'm not gonna base 100% on my trades or on Fibonacci. It's just another layer of confirmation. That's it.
All right.
But yeah, tomorrow we'll go more in depth on the technicals of it. Today is just the basics and the theory part of it.
All right.
Right? Any further questions, bro?
So far no, bro.
All right, Shintik. So what you can do is tomorrow if you have the time, but it's okay again.
Yeah, okay.
It's fine, and then we do it on Monday straight away. Exercise.
Okay. All right. That'd be great, bro.
So we're gonna focus on the Hour 4 and the 15 first. After that, on the second or the third week, we'll go back to the weekly, daily, and then the Hour 4, right?
Okay.
So remember, Hour 4 and the 15, your Hour 4 is your bias and your behavior both at once. Your 15 is just your execution, nothing else.
Okay.
All right.
Execution. All right.
Yep. So yeah, I think that's about it for today. Jay, all good? Oh, Jay.
Yeah.
Still there? Right.
Need to
So
reward again.
you put so for you as well, and next week we'll go
Execution.
with the exercise.
Okay.
Yeah, and later on I'll send the 15 pass. Add it to your watch
Alright.
list. Holy, look at that. We got a breakout, man. 10:30, 10:30. Shit.
10:50. Oof.
Oof. Now we don't have news, I think. News dah habis dah. Why is trading view lagging?
Always, bro.
Yeah, always terrible. It's a good thing that now we are used to MT5.
Yeah. just directly analyze and took a trade.
Straight away.
Yeah.
Yeah, it's still same as seen. Let's let it be first. It's no trades for today. Right? So yeah, that's about it for today. Thanks for joining. And any questions, ask me straight away. Rewatch the live. And we'll get back to you tomorrow at let's go live at 9:30 tomorrow.
9:30 tomorrow. Okay. Sounds great.
Because esok pun tak ada entry, Friday pun tak ada entry, but Friday no class. So back to it on tomorrow and then Monday. Nothing else.
Alright. Sure, bro.
So homework, kalau boleh Saturday do some analysis on because with the good thing with swing trades is you can even analyze on a Saturday and Sunday and then just wait for it to play out on Monday towards Friday, right? So what we can do is Saturday and Sunday we can go with analysis, practice analysis. I want you guys to take screenshots, try and analyze as what we did prior to this, but based on the Power 4 and the 15, and just send it to me. Give me your trade ideas, give me your pullback, your push face, everything. Whatever it is, right?
Okay. Alright.
Saturday and Sunday, kalau boleh. 2 pairs.
2 pairs. Okay.
In total, it will be 2 pairs. Sorry, 4 pairs because Saturday Euro USD and GBP JPY. Sunday, let's go with GBP USD and GBP. Sorry, Euro GBP.
Okay, I can explain. I can repeat the thing again.
Saturday GJ and EU. Saturday GJ and EU. Sunday will be GU and EG. EUR GBP.
Saturday. And Sunday be
GU and Euro GBP. GU is a GBP USD.
Okay. GU.
So 4 pairs in total. We will analyze on Saturday, Sunday, and then throughout the whole week, Monday to Friday, we just monitor. That's it.
Okay. The Sunday is GU and EU, right?
Sunday is GU and EG, Euro GBP.
Okay, EG.
So just follow the sequence here.
Okay.
GJ, EU, GU, and then EG. Four of this pack.
Okay.
So add it to your watch list as well. So,
All right.
so
sure.
I think this will suit you guys for now, for you to slowly grow your account, because you don't have much time to properly analyze and all, right? I mean,
Yeah.
properly take proper entries. So because swing trades works by pre-planning, so you just have to pre-plan and then wait for price to come to your entry point, and then you execute. You can put a sell limit, you can put a sell stop, buy stop, whatever it is. But usually with this type of entries, it's gonna be a buy limit and sell limit. Why? It's because we're gonna use Fibonacci, right? So
Yep.
as an example, let's go with this here. It's not perfect, but then yeah, let's go with this area here. Example, if you know that you want to take a buy once price rejects the 0.5% area, what you can do is you can put a buy limit over here. So the moment price comes and taps that area, you're gonna get triggered into the trade. You don't even have to do anything. You just set and forget, right?
All right.
Price comes down, taps you, but you need to pre-plan your stop loss and know where to put your stop loss. So usually it will be on the second line, this one. So you put your stop loss there, and you just set and forget. You come back after 3-4 days. If it hits your TP, you win the trade. It doesn't hit your TP, you lose 1%. That's it.
All right.
So your TP2 is gonna make you 2.5%. Your TP3 is gonna make you 3.8% in total. Right?
Okay.
All right, Chun. So yeah, that's about it for today. Thanks for joining, guys. Anything, just let me know earlier.
All right. For sure, bro.
All right. Gerak lu, Papa Raja.
All right.
See you,
Thank you so
Jay.
much,
Peace
bro.
be with you. Peace be with you, Isa.
All right.
Take care,
You too,
guys.
bro.
Bye. Good night.
All right. Thank you so much. Bye-bye.
No
Good
worries,
night,
man. All good.
everyone.
And kalau boleh suruh Amil rewatch the live kalau jumpa.
Yeah, for sure, bro. I'll
Alright.
let you know.
Yeah. Gerak dulu, Papa Raja.
All right. Goodbye.